Hello and welcome to another update video on gold. In yesterday's video, we covered really all of these scenarios that we're tracking currently in detail. Therefore, today I just want to take a quick look at the current price action. So in yesterday's video, we saw that the market was approaching the 88.7 Fibonacci retracement at $3,448. And the idea was that we are likely going to test it. And then we have seen a rejection from there and a pullback into the support zone that we talked about yesterday as well. So in our green scenario, in the bullish scenario, the price now actually needs to hold, this level, right? That's what we said yesterday. We're exactly at that point, which is why this video makes sense now. Because, you know, in this direct move to the upside, we are tracking a wave 1, a wave 2. And then another 1-2 setup, and we could have completed the third wave. This could be the fourth, and then we do this. To confirm that further, the price really needs to hold above the wave 1 high. Any break below that would be an invalidation of the structure, and that level is at $3,389. That's exactly where we are now. Now there is a response to that level, and if we now break out to the upside from here, it would simply be a continuation of the green scenario to the upside. Breaking below that level would make it more obvious that a top of sorts has indeed formed, either in the white scenario, which is the bearish version that might send us down towards that blue zone 3090 or lower, or, and that is actually a scenario I'm tracking, I don't want to say with confidence because it's a triangle, so it's messy. But in this orange triangle, yeah, we could also be forming the E wave, basically the last leg down, and that's the count I said yesterday I slightly prefer, just because this looks like a triangle. It has three waves down, 3 waves up, 3 waves down, 3 waves up. And we could just do this before we go higher. Definitely a scenario that should be taken seriously. And that will become more likely with a break below the red line, because, I mean, we could go lower, just do this, for example, and then break out. And people might say, but the support broke. Yeah, support broke. But again, that's for the green scenario. In the orange count, we could get a corrective pullback, which might go deeper, yeah, in this E wave, which is always a 3-wave move. But we hold above that swing low there from the 29th of June that formed at 3,250, and that would still keep the orange count alive and would still be potentially bullish. But then we just want to see a first impulse. Like if we break support, the focus is on lower. But if we then see a first upside impulse, a first micro 5-wave move up, then that would be our indication that orange wave 4 has bottomed. So to be clear, we definitely still have bullish options here. And in the green scenario, the market now needs to break out higher, just here and now, yeah. If we don't hold that support level, then it is more clearly a short-term bearish count, which, however, doesn't mean we have to break, everything is collapsing. Just might mean that we're dealing with a bit of a broader correction in this larger wave 4. And then, honestly, I mean, there are some additional levels then that we can watch. I will give you some. For example, one way of calculating a target for an E wave of a triangle is to take the length of the C wave, and then we compare that with the potential length of the E wave, and that's typically a very common level. A very common level is the 61.8 Fib level. So I think this is just a level to watch at $3,309. It's just a key level to watch there, an ideal level, just a typical Fibonacci relationship. That's also where these previous swing lows are located here. Yeah, so there could be some support in this region there around $3,300. So yeah, that's the update on gold. I hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you're interested in additional updates on gold, but also silver and the S&P 500 and stocks, check out our stocks membership. You can find the link in the description. Thanks so much. Bye-bye.